Right friends, welcome back to 18th module, snapshot on banking operations. We are going to discuss Reserve Bank of India in this module. What is the purpose of Reserve Bank of India? Before understanding the purpose of Reserve Bank of India, here I gave 4 examples, 4 such central banks across the world. First one is Reserve Bank of India. We are going to discuss anyhow details about Reserve Bank of India. Second one is the European Central Bank. European Central Bank is the central bank headquartered in Frankfurt in Germany, and it looks at the central banking operations for the Euro countries. Then Federal Reserve. Federal Reserve is the central bank of United States of America, and its head is Janet Yellen. And look at another central bank, that is the Sveriges Riksbank. This is the central bank of Sweden. This is the oldest central bank in the world. So I have given for example these 4 are the central banks: Reserve Bank of India, European Central Bank, then Federal Reserve for United States of America, then Sveriges Riksbank, this is Central Bank of Sweden. So like that, each and every country will have their own central banks, and the basic purpose is to look at the monetary system. The fundamental principle of reserve banks, or you can say central banks across the world, is to look at the currency. That means the intrinsic value of currency is to be preserved. If you look at India, the main purpose is monetary stability of our currency. The intrinsic value of rupee is to be preserved. And if you look at the European Central Bank, intrinsic value of euro is to be preserved. Similarly, Federal Reserve, intrinsic value of dollar is to be preserved. That means preserving the intrinsic value of currencies is first and the foremost duty of the central banks. That is called monetary stability. For that purpose only, they will undertake various steps to maintain the intrinsic value of currency, and we are going to discuss in detail about the functions of Reserve Bank of India. And at the same time, please don't forget, Bank for International Settlements is there. Bank for International Settlements, its headquarters is in Basel, Switzerland, with 2 representative offices. One is in Hong Kong and the other one is Mexico City. Headquarters is Basel, Switzerland, and 2 representative offices in Hong Kong and Mexico City. What is the main purpose of Bank for International Settlements? The main purpose of Bank for International Settlements is to look at the monetary and financial stability across the world. The purpose of each and every central bank is to look at the monetary stability of each and every country. But nowadays, the global economy is interconnected. That's why this Bank for International Settlements, or BIS, Basel, Switzerland, is the central bank for the central banks. You can say, to look at the monetary stability and financial stability of the world as a whole. That's why several central banks are members of BIS. Central banks like RBI, European Central Bank, Federal Reserve, these are all members of BIS, Bank for International Settlements. And Bank for International Settlements look at the financial and monetary stability of the world as a whole, whereas the individual central banks look at the monetary stability of their respective countries. The main purpose of central bank is to preserve the value of currency without much volatility, without much change, right? So having learnt this, let us look at the preamble of Reserve Bank of India. What is preamble? Preamble states the intended purpose of any organization. If you look at the preamble of India, it says socialist, secular, sovereign republic, something like that. That means the so-called goal of that particular organization or so-called goal of that particular entity is evident from preamble. Here if you look at the preamble of Reserve Bank of India, to regulate, please look into sentence carefully, to regulate the issue of banknotes, basically to regulate issue of banknotes. So, the Reserve Bank of India is vested with power for regulation of issue of banknotes. How many banknotes are to be issued, and the calculation part and the design part, everything is formulated by Reserve Bank of India, but finally approved by Government of India. Please don't forget. The Reserve Bank of India will recommend to Government of India how many currency notes are required, what is the design of the currency notes. So, these are all recommended by the Reserve Bank of India and finally approved by central government. And keeping of reserves with a view to secure monetary stability. All of you are well aware about CRR, SLR. These are all reserves, cash reserve ratio, statutory liquidity ratio. So, these reserves are to be kept so as to maintain monetary stability of the country. That is why CRR is some 4%, SLR is 21.5%, like that. Keeping of these reserves is kept in the preamble itself. So, preamble basically looks at issue of banknotes, keeping of reserves with a view to secure monetary stability, that means the CRR, SLR are made mandatory as per the preamble itself, and generally to operate the currency and credit system of the country to its advantage. The credit system should be to the advantage of the country. If the interest rate is to be reduced or interest rate is to be increased, these are all the lookout of Reserve Bank of India, so that the credit system should work to the advantage of the country. Sometimes Reserve Bank of India reduces repo rate, sometimes Reserve Bank of India increases repo rates. Through it, it gives a signal to the banking industry about the interest rate structure. So, the main purpose of Reserve Bank of India is to devise currency and credit system to the advantage of the country. So, three things are evident from this. First and the foremost is issue of banknotes. Second important point is the reserves with a view to secure monetary stability, to ensure monetary stability in the country. That means bank should not fail, rupee should not lose its value. This is all monetary stability. So, to ensure monetary stability, reserves are to be kept. That is the prerogative of Reserve Bank of India. Third is interest rates. That means to operate the credit system of the country to its advantage. That means repo rate is to be reduced or increased. These are all the prerogatives of Reserve Bank of India, which is evident from the preamble itself. So, from the preamble, these things are known. And now look at the salient points. Reserve Bank of India was established on April 1, 1935 based on Reserve Bank of India Act 1934, and prior to 1935, Imperial Bank of India, now known as State Bank of India, looked after the functions of central bank. Initial headquarters Kolkata, then Calcutta, now Kolkata, in the year 1935, but shifted to Mumbai, Mint Street, Mumbai. 1937, it became headquarters of Central Bank. Now the Central Bank headquarters, Mint Street, Mumbai. Originally it was privately owned but nationalized from 1st January 1949, fully owned by the Government of India. Offices in Mint Street, Mumbai, governed by Central Board of Directors. If you look at the Central Board of Directors, there will be 5 official directors, then non-official directors will be there. These official directors are, you can say, full-time directors. That one is the governor, normally who is the head, then 4 deputy governors. So, Reserve Bank cannot have more than 4 deputy governors. And if you look at the non-official, 10 directors from various fields to be nominated by the Government of India, and 4 directors from each local board of Reserve Bank of India. 2 government officials will be there. 2 government officials basically from Ministry of Finance will be there as non-official directors. So, the Central Board of Directors of Reserve Bank of India constitutes official or full-time 5 and non-official 16, total it makes 21. So, official directors are governor and 4 deputy governors, right friends. So, this is the Central Board of Directors. And the legal framework, if you look at, under what legal framework it is working? Basic act is RBI Act of 1934. Reserve Bank of India basically functions under RBI Act of 1934. Then comes the Public Debt Act and Government Securities Act. Public Debt Act means Government of India takes loans from public. That is called market borrowing program. This year, the market borrowing program of central government is 6 lakh crores of rupees for the year 2015-16. Basically, central government borrows from market to bridge the fiscal deficit. Fiscal deficit is the gap between expenditure and revenue. Government will bridge the fiscal deficit by borrowing from market, which is known as market borrowing program. And this public debt at present is managed by Reserve Bank of India on behalf of government. Reserve Bank of India acts as a mediator for borrowing money from public, and this is as per Public Debt Act of 1944. Now there are news that government wants to separate this function from Reserve Bank of India by establishing Public Debt Management Agency. So please don't forget, from these acts, what are the responsibilities of Reserve Bank of India? You will come to know directly. First is RBI Act 1934. Basically, it will function based on RBI Act. Second is Public Debt Act 1944. That means public debt, that is borrowing of the government, is undertaken by Reserve Bank of India. Payment and Settlement Systems Act. All RTGS, NEFT, electronic clearances, all these things are based on Payment and Settlement Systems Act of 2007. And RBI stipulates norms based on this act, Payment and Settlement Systems Act. Then Banking Regulation Act of 1949, how the banks are to be governed. Based on Banking Regulation Act, that is the responsibility of Reserve Bank of India to see whether the banks are being governed based on Banking Regulation Act of 1949 or not. Then comes SURFACE Act of 2002. SURFACE Act was basically brought with keeping in view the bad loans. To recover bad loans, this SURFACE Act was brought in the year 2002, and whether these are enforced or not, that is to be looked after by Reserve Bank of India. If you look at other acts, Negotiable Instruments Act. Under Negotiable Instrument Act, one example is checks. All the checks or the instruments under Negotiable Instruments Act, whether the rules and regulations are being followed or not under this act, Reserve Bank will see. SBI Act. This SBI Act pertains to nationalization of State Bank of India in the year 1955. Rules and regulations governing this act will be looked after by the Reserve Bank of India. Then Companies Act. Bank, of course, is a company. It is a financial company. It is banking company. So RBI will look into the aspect whether banks are following the stipulations of Companies Act or not. Then DICGC Act of 1961, DICGC, that is Deposit Insurance Credit Guarantee Corporation. It is wholly owned subsidiary of Reserve Bank of India. This act was brought in 1961 basically to compensate the customers when bank goes into insolvency. When bank goes into insolvency, the customers of the bank will be paid up to maximum of rupees 1 lakh under DICGC Act. So that is looked after by Reserve Bank of India, and please don't forget, the head of DICGC is one of the deputy governors of Reserve Bank of India. Then Banking Companies Act of 1970. This Banking Companies Act of 1970 nationalized 14 banks. Banking Companies Act of 1980, this nationalized 6 banks. Then NABARD Act of 1981. Under NABARD Act of 1981, National Bank for Agriculture and Rural Development was established in the year 1982 so as to work as a sectoral development organization for agriculture and rural development in rural areas. This NABARD was established, and the framework is as per NABARD Act of 1981, and Reserve Bank has to look into all these aspects before acting as a regulator for all these institutions. the National Housing Bank Act of 1987. This Act of 1987 led to the establishment of National Housing Bank, and please don't forget, National Housing Bank is the regulator for housing finance companies. Then RRB's Act of 1976, regional rural banks were established in the year 1975, and subsequently Act was brought in 1976, and the functions of regional rural banks should be as per this RRB's Act of 1976. What I mean to convey is, based on these acts, several institutions were established, and it is the primary duty of Reserve Bank of India to ensure that these organizations function as per the acts specified. As per the clauses of the act, these organizations are to function. That is the lookout of Reserve Bank of India, being the central banking institution for the country. Right friends, look into the next issue, that is what are the main functions of Reserve Bank of India. The first and the foremost function is, it will act as a monetary authority. Basic purpose of monetary authority is to preserve the intrinsic value of rupee. Rupee should not fall. When there is inflation, that means the value of rupee will fall. RBI will take steps to control inflation so as to preserve the value of rupee. So, all the steps like repo rate, CRR, SLR, open market operations, these are part of monetary policy of Reserve Bank of India, and Reserve Bank of India is the authority vested with maintaining the value of rupee. We discussed in detail when we discussed fiscal policy and monetary policy. Please listen to that lecture. Regulator and supervisor of the financial system. It is the regulator for several non-banking financial companies. So, overall, it is the regulator and supervisor of the financial system as a whole in the country. Manager of foreign exchange. It manages or controls the foreign exchange reserves, and it is the organization vested with the implementation of Foreign Exchange Management Act of 1999. Whether the organizations are following the rules and regulations with regard to Foreign Exchange Management Act of 1999, that is vested with Reserve Bank of India. Issuer of currency. Here I would like to tell you few points. The design and the requirement of currency notes will be decided finally by central government, but recommended by Reserve Bank of India. How many currency notes are required to replace the soiled notes? And some currency notes are required if some reserves are increased. Some currency notes are required so as to take care of increased GDP. All these calculations are done by Reserve Bank of India. Finally, it is put up to central government for approval. So, the final authority is central government, but recommendation is done by Reserve Bank of India. And at the same time, please don't forget, as per the Act, Reserve Bank can print currency notes up to rupees 10,000 also, but central government permitted printing up to rupees 1,000. Sometime back, 5,000 rupee notes, 10,000 rupee notes were also in vogue, but central government took a decision to restrict the value of currency notes up to rupees 1,000. So, at present rupees 1,000 rupee notes are printed, but as per the Act, central government can go up to rupees 5,000 and rupees 10,000 notes also. And other important point is, under Indian Coinage Act of 2011, it is the responsibility of central government to look into the coins. It is not the responsibility of Reserve Bank of India. Under Indian Coinage Act, central government is vested with the full powers with regard to the coins, but Reserve Bank of India has got no role to play except distribution of coins. but currency notes except rupees 1 currency notes, rupees 2 currency notes and above, it is the prerogative of Reserve Bank of India, but the final decision will be taken by the central government, and as per the act, currency notes of rupees 5,000, rupees 10,000 can also be printed, but central government took a decision not to exceed rupees 1,000, and under Indian Coinage Act, maximum amount a coin can be minted is rupees 1,000, please don't forget, but central government allowed only up to rupees 10, right? So entirely the responsibility of coins rests with central government, but Reserve Bank has got full powers with regard to the issuer of currency of rupees 2 and above. Next point is banker to governments and scheduled banks. The scheduled banks, central bank will act as the banker, and at the same time for the governments, the banker is central bank. These things please don't forget. In addition to these, Reserve Bank of India is also vested with the developmental functions. So these are all the main functions of Reserve Bank of India, and fully owned subsidiaries of Reserve Bank of India. Reserve Bank of India has got fully owned subsidiaries. One is DICGC. This is Deposit Insurance and Credit Guarantee Corporation, established somewhere around 1961. This is the fully owned subsidiary of Reserve Bank of India, and here the chairman is one of the deputy governors of Reserve Bank of India. At present, Shri R. Gandhi is the chairman. The purpose of DICGC is to act as insurer to the customers of the bank. If bank goes into liquidation, DICGC will pay to each and every customer an amount not exceeding rupees 1 lakh. DICGC will pay an amount not exceeding rupees 1 lakh if bank goes into liquidation. Second important aspect or second owned subsidiary of Reserve Bank of India is Bharatiya Reserve Bank Note Mudran Private Limited. Bharatiya Reserve Bank Note Mudran Private Limited. It has got its main office at Bengaluru with 2 printing presses for printing of currency notes, one at Mysore, the other one at Salboni in West Bengal, one at Mysore in Karnataka, the second one is Salboni in West Bengal. These 2 presses are owned by Reserve Bank of India, but Government of India has got 2 presses. One is Nasik, the second one is Devas. Devas is in Madhya Pradesh near Indore. The second one is Nasik in Maharashtra. But Reserve Bank of India owned presses are there at 2 places. One is Mysore in Karnataka, second one is in West Bengal. Look into the third fully owned subsidiary of Reserve Bank of India, that is National Housing Bank. National Housing Bank is fully owned subsidiary of Reserve Bank of India and headquarters in New Delhi, and at the same time here it is the housing regulator for housing finance companies. For housing finance companies, this is the regulator, National Housing Bank, headquarters in New Delhi. Look at the training establishments of Reserve Bank of India. One is College of Agricultural Banking at Pune. The second one is the Reserve Bank Staff College situated in Chennai. And last, please look at autonomous institutions established by Reserve Bank of India. The first one is National Institute of Bank Management, Pune. This is autonomous institute established by Reserve Bank of India and other banks. National Institute of Bank Management, Pune. Then for research purpose, Indira Gandhi Institute of Development Research was established with headquarters at Mumbai. These are autonomous institutions but established by Reserve Bank of India. Third one is Institute for Development and Research in Banking Technology. This is IDRBT. Basically, it is the research institute to look at the digitalization of banking operations, so as to ensure digitalization across the banking operations. This IDRBT or Institute for Development and Research in Banking Technology with headquarters at Hyderabad is vested with the research basically for digitalization. So, 3 autonomous institutions: National Institute of Bank Management Pune, then IGIDR at Mumbai, IDRBT at Hyderabad. 2 training establishments, one is College of Agricultural Banking Pune, second one is Reserve Bank Staff College Chennai, then 3 fully owned subsidiaries, one is the DICGC, BRB and MPL and National Housing Bank. So, these are the organizations and fully owned subsidiaries. So, with this let us conclude today's lecture on Reserve Bank of India. Please do join for 19th module. We are going to discuss some key terminology in 19th module. Have a nice day. Thank you.